that house to you essentially is your leverage against inflation. I don't think you'll get compound success or real big true success or whatever until you fully commit to something. I always tell all of my clients too, if you're going to try to build a real estate portfolio, one of the great ways to do that is if you have a...
In Las Vegas, authenticity is rare. Generosity, even rarer. And the longer that you work around people, the clearer it becomes who is in it for themselves versus who is truly trying to help someone else. Businesses often start with one person that care very deeply about something. They're bringing solutions to a problem to help other people. And in 2019, I bought my first house with a loan officer, and let me tell you, they were nothing like Mario. Mario delivers real financial education to anyone aspiring towards homeownership. Their family team has served the Southern Nevada community for over 30 years as the local mortgage experts. And today, you'll hear how he fought doubts about committing to his family's business in his youth, but eventually his passion exploded. He creates opportunities that fit real lives, and he finds solutions to get people across the finish line. He's driven by integrity and doing right by his community. In this interview, you'll see where we discuss Las Vegas real estate truths, home buying advice, his story, and sales strategies that work. Mario is one of a kind. And I'd like to note that I failed to catch when the second camera stopped recording, but all the same, I hope you enjoy our conversation. So please, meet Mario.
Look at that background, it looks beautiful.
Yeah, you've got a killer office.
Okay, so that's one thing that I'm trying to actually figure out is if I'm going to be getting a bigger office now with Saley and my mom and you and Jenny and all them. What do you think?
I think you definitely need one because when I was talking to Saley, it's like trying to imagine two people in one space like this making phone calls at the same time.
Well, that would be, yeah, making the phone call thing would be a little bit difficult. Although, coming from a call center background, I really like the idea of being right next to somebody because
that's nuts.
It is nuts, to be honest with you, because when you're in a call center, although like you can, when you're kind of like in the groove and in like the zone, nothing else. Like you, even if I'm surrounded by a whole 1,000 people in the call center and everyone's screaming, whatever, you like phase it out a little bit almost, you know?
That's a rare talent, I think.
You think so? Yeah.
Yeah, like that flow state, because I've talked to, for example, like Saley, whenever she goes into the office, whenever she's hearing other people around her and it's almost like they're in sync with the pitch, and then suddenly someone goes off a different direction with the pitch. It's like she can't stop listening to them now.
Okay.
But yeah.
That's actually one of the things about a call center too that I loved more than anything was the ability to listen to other people.
Oh.
Because I feel like, especially if you're smart about like targeting or listening to the big producers, or maybe someone has a style that you don't have and you can kind of pick up on a little bit, that's how you just get better, like exponentially faster. That's why I feel like it would be better. Just like me meeting with Saley on Mondays, she has full access to, like, I'm answering my phone on speaker, I'm blah, blah, blah. Like, I want her to be able to hear how I'm having those conversations, and not necessarily the conversation itself, but how I'm driving the conversation, right?
Yeah.
I was actually just explaining this to my wife earlier today. When we were at lunch, you know what I mean? It's like, when it comes to pleasantries with someone, like, of course you want to say, hey, John, how are you doing? Blah, blah, blah. But it's not necessarily because I want the answer of how you're doing, because that answer could be anywhere. You could be doing terribly. You could be doing like shit. You could be having whatever. And that alone could derail like where this conversation's going. So I like to kind of marry the two, like always be super kind and, you know, tactical with pleasantries and things like that, but like immediately blowing past that to get to the direction of the conversation. Like, you have to lead it, you know what I mean? Versus, hi, John, how are you today? It's like, okay, boom, 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 boom. Like, you know what I mean? Little itty bitty things like that. So I want her to be able to see how I handle that structure of a conversation first. You know
Is asking how are you during a sales call like one of the worst things that you could do regardless of industry?
Probably, yeah. Okay. Unless you, like I said, unless you had a game plan for it immediately. You know what I mean? It's one of those things where when it comes to sales, especially when you have you should have a system and process always. You know what I mean? I feel like, especially in conversation, where it's like, I know exactly where this conversation's going, why it's going there, what objections are gonna be asked. Like I said earlier, I'm gonna be the one likely to bring up the objection because I want you to understand that I realize it too, and I wanna help you overcome it, et cetera, et cetera. But yeah, pleasantries, open-ended questions. Like, I don't want to give someone the opportunity to say no too many times. Otherwise, like usually, you know what I mean? Like you don't want to run into like objection after objection after objection, because once someone says no like 3 or 4 times, like you're done with the thing. You know what I mean? Like,
Yes.
So where on the flip side of that, if I can get someone to say no 3, 4, or 5 times in a row, it's much easier to move them along the sales funnel or the process. You know what I mean? So
To get them to say no multiple times.
to say yes to move them forward. You know what I
Okay.
mean? I don't necessarily want them to say no, but I'm also not giving them the opportunity to say no too many times. Does that make sense?
Yeah, it's like controlling the yeses and nos,
Exactly.
like in the split the difference
Yes.
concept. Yeah.
So, yeah, there's like I'm like a big sales theory person, so I like there's like formulas to it, I feel like, you know what I mean? And
I agree.
Scripting's huge. Like I think Saley, a couple weeks ago, I had her write out like her initial scripts of like, what would you say for an initial outbound call to a cold lead? What would you say to one of my clients that I'm referring to that's a warm lead or whatever, you know what I mean? So we're gonna help kind of form that to where she's just basically gonna say the same thing all the time, you know what I mean?
Yeah, I think that like that IQ of just, it's almost like a different muscle entirely. Like there's your physical muscle if you're doing like something in the gym. There's your mental muscle that you've built up over specific subjects. But the action of speaking and translating those thoughts, that is a very unique skill. And like to your point, like sales is something that people oftentimes have to build upon, or they feel like, oh, this isn't for me. But it's like mental chess. It really is chess, because you're already thinking ahead of like, well, what the objection is going to be and like how to counter that.
Yep.
And some people are meant to do it better than others.
No, it's very much like a chess game, you know what I mean? And that's not to say that I'm trying to beat the other person per se,
Yeah.
because again, especially doing what we do in the finance world, in the mortgage industry, whatever, we're, as I'm always saying, partnering alongside them. And how I like to put it in people's heads is, if it was me, I want to do business that's with someone that's sitting on the same side of the table as me, not on the other side of the table trying to do a transaction or get me to move forward, right?
Right.
I don't care necessarily when you're moving forward. My goal is that you are moving forward in an educated fashion with a game plan in place, and you know what the future ahead of that looks like as well, like after you accomplish your goal. So that's why with me, I'm always explaining to my clients that we are going to share the same side of the table. I'm not going to be on the other side of it from you. You know what I mean? So although strategically, as you can see how I just put it that way, right? It's very disarming, right? Because that's the point of it. And it's not necessarily that I'm trying to sell you on the idea of me, although that's the goal that it accomplishes when you hear it.
Yeah, it really does. But I think the authenticity there, it's also there with you because...
Yeah, because I'm not joking. I'm being dead serious.
Yeah, I mean, what you're trying to do is like you're really trying to help people. It's like
Yeah.
in no way what you're selling or what you're doing is intentionally trying to harm anybody or take from anybody or create a disservice to anyone.
Yeah.
So I think that like just having like within that product base of like everything is just for help, like that's unique.
Yeah, one of the things I feel like when you, especially teaching sales, that's very difficult to do is you can, what I'm saying, if you recorded what I was saying, or if you were giving someone the same script as what I'm saying or whatever,
Yep.
that same person can say the same words, but they have to believe it internally to be able to project it for someone to be able to buy into it or accept the idea or move forward and get beyond that analysis paralysis, because words are powerful for sure, but it's more of like the internalization of, do you believe it? You know what I mean? Like I can't get someone to do it until they believe it. Much like I can't get, if I'm training a salesperson, if you've not closed a deal before, it's going to be very difficult to get you to close the deal until you've done it, right? So a lot of times I prefer more of a hand-holding approach with someone to be able to get them to start believing in themselves, you know what I mean? Yeah. Much like my clients, like I'm gonna hold your hand the entire way. I'm not going to just expect you to be able to accomplish everything that I'm saying or doing or requiring from you by yourself. I'm gonna help you collect the items. I'm gonna help you understand the whys, the whats. I'm gonna help you understand the importance of the insurance policies that you're getting from the homeowners, like whatever, like all of the above, because otherwise it's a lot, you know what I mean?
Oh yeah, I mean, I was at an open house yesterday with one of your real estate agent partners, And so speaking with Patty, she said that Mario is very unique. Like there is no other loan officer or broker that will work with you the way that Mario does. And even from my own first-time home buying experience or first home buying experience, it is a big difference because even though I'm not trying to get anything from you or vice versa, it's the amount of like detail, education, and authenticity that you're bringing to the table. It's like you really care about getting these people over to the finish line, but it's almost like it's not as if it's self-serving either. Like and maybe that's just you're so good at sales that's that big help approach that you're bringing to the table in every engagement.
Right.
But yeah, I was like, my mortgage loan officer was nothing like you. Like he wasn't walking us through each detail. He was saying, these are the paperworks that I need. He would send us a report back of like, this is what you're approved for. In terms of what was going on in the background, what type of just any other additional benefits he could give us, I had no idea. It was just, here's what you guys submitted to me on a piece of paper for a pre-approval and ready to roll.
And that's, it's, trust me, the most common experience that most people have in this industry because you're talking about, somebody that may or may not see, let's say your average loan officer or whatever, if they're doing at a high level or whatever, talk to 50 to 100 people a month maybe. Hopefully it's more than that, obviously, but imagine that's the number that they're talking to. And if they're putting as much time and effort as I am with every single person or every single opportunity that they have, and they don't have systems and processes and experience and whatever at place, they would not be able to do that because they'd be overwhelmed by the amount of time it would take. Most people, unlike myself, they don't like to work 16 hours a day or whatever the case may be. They have children and they have, although I do have a wife, I am married, like they have other things that they have to focus on versus my sole focus outside of, my wife and taking care of my family or whatever is my business. And I take it super duper seriously, right? That's why when I'm working with my clients, I expect a certain level of respect back when it comes to my commitment to them, as well as their reciprocity back to me for the follow through type thing. You know what I mean? So, that's just what you expect from most people in the industry, where one of the taglines for Sienna Mortgage and why it's so important to me and why I made it that is where partnership matters. That's because to me, especially in this specific industry, when it comes to real estate mortgage, the partnership should always mean more than the transaction, okay? Like the partnership piece should always be more important than the transaction itself. The transaction itself means a paycheck, which is fantastic, but a relationship with that person, okay, should mean many paychecks for the rest of your life, as long as you nurture and earn that person's, when you're talking about a relationship, their respect, their attention, their, all of the above, versus, okay, I'm just going to collect an application from you. Hopefully I get you to your end goal, which is the house, and then goodbye, see you later, we're never going to talk to you again. Most of the reason people in my industry don't show up to things like the closing or whatever is because they haven't confidently enough explained everything to you by the time you get to that closing table, and they're not ready to face, like, okay, are they gonna have any questions? Are they gonna sign the papers? Are they gonna go through with it? Like, that to me is my proudest moment. That's my crown of, here's all the work that I've done. You know exactly what those numbers are. You're closing on this house or refinance, whatever, in confidence. You not only get the end result and desired outcome that you were looking for, but you also know what that future 1 year, 5 year, 15 year from now looks like as well. You know what I mean? That's why I show up to the closing. That's why I am just, there to enjoy that moment with them. You know what I mean? So, yeah, it's just different. I very much play the long game, being here 30 plus years in this, town and community and industry specifically. It's, important, if you want to do it that way.
Yeah, but I think that, again, like you were saying, it's like investing into just this person, and it's not always for any direct value to you, because sometimes it could take people over a year to finally be ready to buy their first home, right?
Sometimes more than 3 years, to be honest with you. I've helped people, I think the longest I've had someone come back, I think was 3.5 years, which is excessive, to be honest with you, because it should be, I'll be honest with you, that's a long time. But, it should if we started with someone that absolutely had no ability to qualify for a house because of whatever, income, tax returns, credit, etc., all of those, for the most part, are a solvable scenario. You know what I mean? When it comes to any of those individual items, when you compound those items together, obviously it might lengthen the time horizon for whenever the accomplished goal will happen, but everything is solvable. You know, every single problem. That's one of the reasons I like this industry the most, is you solve for Y. You know what I mean? Like I have X and we solve for Y, and you know, there's always a system that we can deploy for that person. You know what I mean?
Yeah.
With the partnership. I can't do it myself. You know what I mean? I can't make you make more income. I can't make you save money. I can't make you fix your credit. You know what I mean? I can help you, and I can pave the path for you, and I can show you what I personally have done myself, whether it's exactly for me or my other clients, but you still have to do a little bit of the work. So not everyone's going to do it, or not everyone's going to get that, but
I discovered that there's this program in New York. I don't know if it's like New York City specifically or how it's funded or anything, but they do, I think it's called a First Time Homebuyers Club. And so essentially like a bunch of these people will meet up on a weekly basis. They'll kind of go over like, here's a plan for you to eventually get your first house. Like, here's how you're going to improve your FICO, or here's like, you know, every month you're going to be saving this. It's almost like an accountability club.
I like that.
Yeah, I was like, that's really unique. I had never heard of that before today. And so I was just like, yeah, maybe building something like that in Las Vegas would be nice, because I think that especially for Gen Z and like millennials, maybe it's just social media that's painted this picture, but there's almost this belief that it's that much harder or that much more impossible for us to ever become first-time home buyers. Do you think that that's true? Do you think that's influenced by inflation, or we're not making enough money? Are we just not making enough money yet because we're still early in our careers? Or I guess how do you cure that perspective?
There's so many different things all happening at the same time. I feel like in our generation right now, where it's like the price of home ownership, whether that be the cost of real estate itself or interest rates or that piece, is difficult. You know what I mean?
Yeah.
My mom, I think when she bought which my parents still live in the house that I grew up in, they purchased it in 1993. So.
That is so cool.
And yeah, it's cool. It's fun visiting my old bedroom for sure. But it's mind-boggling, especially considering, you know what I mean, like being in the real estate mortgage industry, like we would have thought, you know, many times over that my parents would have moved. They just love that house. They're emotionally attached to it. You know what I mean? But where I was going with that is they purchased that house, I think, in 1993 for like 80 grand. You know what I mean? Like insane. And over the years, many times over, has that house appraised for 400, 450, 500 in this era of time that we're in, which, you know what I mean? If you're talking about something quadrupling in value or price over not that long of a period of time, when wages themselves haven't kept up with the rate of inflation or the cost of goods or whatever, it makes it more difficult for people. Although not impossible, obviously, because like that's one thing when it comes to like the noise, when it comes to, especially with us in our generation where we have access to free media, and then you have the addition of the regular media, and then you have, you know, all of the above. There's a lot of noise that you have to like wade through yourself, and if you don't know how to discern what's true, what's not, how it applies to you, how it doesn't, it feels heavy. You know what I mean? So one of the things that, again, why I lean so heavily on education is because I like to take a first-time home buyer or someone that doesn't otherwise understand all of those moving parts and explain to them the value of home ownership, the value of starting the process, the value of why that house to you essentially is your leverage against inflation. You know what I mean? Because our home prices essentially are kind of golden handcuffed to inflation. As inflation increases, the values of our homes increase historically. You know what I mean? So that's one of the things where you can preserve, you know, personal and financial wealth when it comes to becoming a homeowner. You're also talking about like eliminating something that is an inherent expense for housing, like rent, and you're essentially exchanging it for what's called like a forced piggy bank, which is your house. You know what I mean? Where people have this idea of, you know, equity. They understand it. Their parents, you know, from like the late 90s and early 2000s abused it, to say the least. But equity is a beautiful thing, you know what I mean? And that comes in, you know, a lot of people don't realize, you know, equity is twofold, especially here in Vegas, where we have something called home appreciation, where not, you know, my wife is from Ohio. So in Ohio, the Midwest, some parts of the East Coast there, where people are not moving there on an extremely regular basis, like here in Las Vegas, their home values don't shoot up or whatever as historically quickly. You know what I mean? Here, historic averages will show you anywhere from 4 to 5% increase year over year for many, 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 many decades because of how transient it is here, how popular it is to live here, the weather here, things like that. So we have home appreciation on one side, where as that continues to grow, obviously our equity position grows, and then at the same time, unconsciously, as you're just otherwise would be paying your rent, you're also paying your mortgage, and that amount of principal that you're paying increases that equity threshold. So it's like that piece where people don't like conceptualize it themselves, they don't understand it themselves, you just have to, I have to bring people along for the ride, if you will. You know what I mean?
Yeah.
It's not like I have people waiting at the door to check their ticket to become a homeowner. They would if they could, but a lot of people don't even believe they have the opportunity to hold the ticket themselves. So it's like I educate on the ride first, then I give them the ticket to get in line, and then eventually, as long as they take the steps and processes forward, they get through the line and they get the result. So
yeah. I mean, I like toe to toe between like from renting right now in the Las Vegas market compared to actually having a mortgage. Are they still pretty toe to toe, or is it right now that in the Las Vegas market it's like renting is cheaper or having a mortgage is cheaper, or does it just totally depend on the person, the loan type, the property type?
It's a great question. I would say it's kind of all of the above. I would say that, in my personal opinion, both personally and as a financial advisor, when it comes to like the mortgage and real estate space specifically, I think that renting should always be cheaper than owning, to be perfectly honest with you. I think that there should be no rhyme or reason or there should be no actual evidence for why would it be the same to own something versus renting something? You know what I mean?
Right.
What I normally use for my clients that I can always make sense of and have them understand it is some sort of like a dollar amount threshold. So if I could say it would cost you $1,000 more a month to own something, have increasing equity position in, ideally, obviously, historically, averagely, over average time, that forced savings account, to me, the most important part is the comfort and certainty of you actually being in a house where somebody's not going to be kicking you out, tell you when to go, how you have to live there, what you have to do inside the house, et cetera, et cetera.
Yeah.
That if someone said, hey, it's going to cost you $1,500 a month to rent versus $2,500 a month to own, with all of my personal experience as a renter, which again, as someone that grew up in the mortgage and real estate space, my mom has owned many, many mortgage companies over here, in our community for many, over 30 years. You would have, you would think that I would own multiple homes, never been a renter, avoided that like the plague, you know what I mean, done all of the right things. And I did exactly the opposite of that, okay? I was a renter for way too long myself. I had some of the most horrific renting experiences that probably you could manifest if I'll give you one example after this conversation if you'd like, because it's crazy. But all of those, you know what I mean? So when it comes to the ownership piece versus the renting piece, just the stability of that alone, where I own my house, nobody tells me what to do, when to do it, how to do it. I don't ever have to worry about someone telling me when it's time to leave. I get to enjoy decorating and living in my space the way that I want to. Just that alone is worth the extra amount of money per month. Now, forget about the fact that, again, as I'm paying my monthly mortgage, as I would my monthly rent, on an unconscious level, not because I'm worried about paying it every month and I can't afford it and I overspent and I stretched my budget and all of the above, but just unconsciously being able to budget properly, you're now making your monthly mortgage payment, which is sticking money somewhere that is not just going out the window on a rent, in a renting type of situation, right?
Yeah.
A portion of that is going to my forced savings. In addition to that, the value of my home is following the rate of inflation and increasing in value, and maybe not every single year, but over historical, see how I'm kind of going with this, example after example after example. There's just, for me, homeownership, in my opinion, should never be equal to or cheaper than renting because of when is something that's better cheaper?
That's really
actually.
Good. That's
you know
such
what I mean?
a good response to it. It's it is because it is better, but I feel like maybe not enough people can recognize can identify the value in it, like you said, right? Like there's
You
no
have to.
rules behind it.
I have to point it out for people because they don't get, most of the time someone doesn't, and that's, I feel like when you're talking about, I'll have conversations with people a lot that are like, oh, I'm not a salesperson. And I'm like, I get it. I know why you're saying that, but you're saying it for all the wrong reasons. And the reason you're not super successful or good at what you're doing is because you don't know all of the right reasons. You know what I mean? When I'm talking about sales, okay, and that could be literally in any industry, it's an ability to communicate properly, right? Be able to define value for somebody and then be able to problem solve to the end goal. You know what I mean? Like those are like the most important things when it comes to being a sales expert or someone that is able to, again, across any industry. I can apply what I'm talking about or the structures of what I'm talking about to literally any industry. You know what I mean? Whether you go out sell solar, you go out and you sell payday loans or whatever the case may be, you know what I mean? Literally anything. You can apply that same structure into someone that needs something. Is there a need there? Sure. Okay, I can fulfill the need by being a sales expert, by being a communicator, a problem solver, an educator, whatever. You know what I mean? I'm not going to, first of all, in the mortgage and real estate industry, you shouldn't be able to help someone accomplish a goal that they otherwise are unable to fulfill. Like, can you qualify for this home loan? Like, no, if you can't, I can't help you. You know what I mean? Like, I can help you get there by following the plan, but you have to be able to still fulfill, you know what I mean, those requirements. Income, employment, assets, credit, like the easy stuff, you know what I mean?
Yeah.
In some other industries, like when you're selling a product, sales gets a really bad rap because you can kind of wiggle your way around, I'm going to convince this person to do this. I can't really convince you to buy a house. It's like not that easy. You know what I mean? So
right, and it's like, and the only thing that you're left to do is to kind of coach them of like, how do you improve your credit?
100%, yeah. And one of the things with me too, where actually I wanted to real quick reel the part where I was saying better is not cheap or whatever. Like that should never be a thing. With me owning a mortgage brokerage, that's one of the reasons why I didn't run out and start working for a large retail lender or some like a mega mortgage lender that maybe would be feeding me business and letting me just be the sales, like whatever.
Yeah.
Because those places also don't provide the best financial incentives or options to the client because of the structure of that business. So that's one of the reasons why I really, we've always been mortgage brokers here in the community for, like I said, over 30 years. And the mortgage broker, when done properly, right, as a small, lean and mean broker shop, right, where you're a mortgage broker, you work with many lenders across the country. Ideally, I'm also rolling out what is the best financial incentives and opportunities to my client, whether that mean the lowest interest rates possible, the lowest closing costs possible, blah, blah, blah. So in our case, we are fulfilling the need with the best possible, you know what I mean, with us, cheaper is better. You know what I mean? You're actually getting the best systems, processes, education, et cetera, while also getting the best rates, et cetera. So I play a very unfair game with my with my clients and my community, but we still need to be able to, get those clients in the door to experience it. So that's the trick. You know what I mean? You have to be able to fight with the big boys to get the client's attention. You know what I mean? So
yeah, and like for the bigger banks, like is it that they don't have like those same type of like leniency and like where they can kind of like trim room to make room for the borrower?
Yeah, no. So how like a lot of the sports arenas, they're named after, let's say, I don't know if I'd actually want to say one on camera, but we can edit this part out. But
they're
like
named after companies, right?
Yeah.
Okay.
So okay, like when you see commercials for mortgage companies, banks, whatever, when you see like all of those things cost money. You know what I mean? Where do you think that money comes from? If you had to guess.
From all the borrowers?
But like what though?
Part of the closing costs.
Okay, yeah. So their closing costs, but most importantly, their interest rates that they're charged. Because that's the part where most people don't drill down enough into or talk enough about is like, okay, you're charging me X rate. What does this other company charge? Why are the two rates not the same? Why are the fees and closing costs not the same? Why are, you know what I mean? And that's where those things come into play. So it's like the structure of the company, the lender that you're working with, again, you have generally the big three. You have what's called the depository. So you have your Bank of America, Wells Fargo, US Bank, whatever. Their system there, where they're a large, essentially federally chartered, bank, obviously, where their employees at the bank work with auto loans, credit cards, deposit accounts, whatever, and they do mortgages, but it's not what they specialize in. So depending on your relationship with the bank, sometimes you'll get, if you're a very, very heavy asset account with that bank or have a very deep relationship with them, you might actually get a decent opportunity from them, but you're never going to be working with an expert at a bank because that's not what they specialize in.
Right.
If that makes sense.
Yeah.
Plus the systems and processes are just a little bit more like analog, they're a little bit slower. Whatever.
Yeah, you don't have that direct relationship with somebody to be checking on your application, to be pushing it through, to be advocating for you. It's
just different.
It's a big machine.
Now, and then you have what's called a retail lender, so a direct lender like a Rocket Mortgage or a Loan Depot, something like that, where they do specialize in mortgages or whatever,
okay.
But they fund and lend their own money, as well as they also, advertise and do all of these other things. They have a lot of middle management, they have whatever, to grow the business. Right? They get bigger and bigger and bigger and bigger to swallow up as much of the market as possible, but that costs a lot of money, right?
Right.
So that money comes from things like interest rates, closing costs, things like that are passed along to the consumer. One of the reasons why we're sitting in a 200 square foot office and I have a very lean and tidy systems and processes here is because I don't want to pass along high rates and high fees to my clients. That's kind of the point of a mortgage broker. In addition to that, we're the industry experts when it comes to mortgage finance. So when it comes to so we have like what's called agency programs. So you have Fannie Mae, Freddie Mac, those are your conventional loans. You have FHA loans, VA loans, USDA loans, and then you have all of the other stuff, which is what's called portfolio lending or non-QM. Mortgage brokers were the experts in all of the above, right?
Wow.
I actually like to say that I'm an expert specifically in some of the nuanced things inside of that, like first-time home buyers or VA home loans or whatever the case may be, because I feel like every single person should be an expert in, something, call it 1 to 3 things. Can't be an expert in everything. It's literally impossible. Mm-hmm. But we have the ability to basically serve every need. Does that make sense?
Yeah.
And yeah, we're the leanest, the meanest. When you look at a loan estimate or a closing disclosure from a mortgage broker, it should be significantly more financially beneficial to you as a consumer when it comes to rate and closing costs. You know what I mean? Depending on that structure of that mortgage brokerage, et cetera. Mm-hmm. And to me, one of the things that people have a hard time convincing me in is always needing to make top dollar as much money as I need on every person. Okay. Now, the reason I believe that is because what we do for a living is tied to their biggest financial future thing, their house, their mortgage, their whatever. It's the largest dollar amount that they're ever going to borrow, and you're borrowing it for, in most times, 30 years. If you have the highest rate that possibly offered in the market or higher than average, you just cost yourself many hundreds of thousands of dollars over interest over the life of your loan for no reason. So for me to say that I'm a community partner in my community and I'm a mortgage broker, lean, mean, the whole 9 yards, I need to be able to serve my community with the best possible offerings that we can manage and still keep our doors open. You know what I mean? So
yeah, that makes a lot of sense. I think that like when you think of economies of scale, when you expect Walmart's this massive company, so Walmart should always be the one to give the lowest prices, right? Mm-hmm. When people look at Wells Fargo, Bank of America, or like any of like these bigger lenders, is that not necessarily the case?
In mortgage finance, it's actually the opposite, I feel like, a lot of times. Because one of the things that we do in our industry, not our company, but the mortgage industry as a whole does, is say, for example, they don't want to do a loan specifically. Like, let's say a specific type of conventional loan or a specific type of FICO score borrower or a specific type of down payment. Mm-hmm. They're just going to represent that type of loan with their bank, their depository, their service at a higher interest rate than average because they don't really want to do it. They're gonna do it, they can do it, they have to do it in some cases, like with banks and credit unions, etc. But it's more expensive with that particular entity because they don't specialize in it, right? Or again, like I said, you don't have a very deep relationship with that. Like I have customers all the time, not all the time, but often enough that have deep relationships with, let's say, Chase, Morgan Stanley, Chase, wait, hold on a second, not Morgan Stanley, JP Morgan.
Oh, yeah.
I'm like, wait a second. So JP Morgan, Chase, whatever, they've got real deep relationship with, they got millions of dollars with them, and yes, there's a very good likelihood, especially depending on what you're trying to do and how you're trying to do it, that Chase is actually going to probably offer you a very decent type of opportunity when it comes to rate and closing costs and terms and things like that, because they want to retain an already existing flourishing relationship with you. But they don't do that for the guy walking off the street that's you know what I mean? Like, it doesn't work like that, you know what I mean? So with us as the mortgage broker, we as a whole are should be the leading industry experts in our community. Does that make sense?
Yeah.
So, and again, real estate is very local, you know what I mean? So you should ideally be working with a local real estate expert in your community and a local mortgage broker in your community, the two experts that can help partner with you and get you to your end goal as affordably as possible, with as little headache as possible, and as educated as possible. That way, moving forward, you can also continue to, dominate in whatever you're planning on doing in the future, right? Buy more real estate, refinance, whatever the case may be. So,
I mean, just having the awareness of, like, for example, when we did our first refinance on our home, because we were trying to get into like the lower rates that were happening like at the end of 2020, or not 2020, like 2021 and stuff. Yeah. We didn't know that we could refinance. I didn't have any idea of, like, or in concept
what do you
of,
mean?
like what the criteria or requirements were for, right?
Crazy.
Like, you were just showing me like an old video, right, about how by refinancing, like, there is going to be costs associated with it. And
no,
I think
refinance is free.
Right, and that was like the biggest deterrent, I think, for most people, like, oh, my mortgage is going to go up because I refinanced, without really understanding like the total benefit of it. Because the first mortgage loan officer that we worked with for buying the house, he did not, all he said was you can't refinance within 6 to 12 months. Didn't give us much context beyond that, and so we were just like, okay, let's just not refinance and not even think about it. But to your point, right, it was like, once you have that relationship with them, they're not only educated with their first home purchase, but going forward, they're always going to know that there's a resource. Like, if they ever needed to do something more with their house or get an understanding of what their options were, it was like they have someone they can reach out to in their community that understands exactly what they need.
100%. And it comes down to the education piece. For me, that's, and done properly, right? When I tee this up the right way, and I deliver on my promises, and I fulfill the goal, and that entire time I've captured somebody's imagination, you know what I mean? Which is, trust me, I'm doing this with people that are like 22 years old, buying their first house, in their first job, never experienced something before. And I'm doing this with the 50-year-old guy that has owned multiple homes before and works for the DEA's office. You know what I mean? Like, way different types of clients, but delivering the same experience, the same everything every single time. It's completely, I can duplicate it, millions and millions of times over. Because at the end of the day, I don't want that one interaction I have with someone to be the last. It should never be that. You know what I mean? You should be, when you're working with an expert and an advisor in whatever it is that you're doing, you should be able to call on that person. You should be able to trust that person. You should be able to, in our industry in sales in mortgage and real estate, it's not, although you end up in a 30-year fixed rate mortgage almost all of the time in this world, when things improve, when life changes, we can refinance, we can sell the house, we can buy something new, we can do. Like, how many people do you know that have been in their house for 30 years other than my parents?
No one. Nobody.
It almost never happens. Yeah. Normally the industry average is that someone's in their house at most 7 to 10 years on average. And so you're thinking, if you have a 30-year mortgage, that means you're in that 30-year time frame have now owned 3 to 4 homes. And you've probably refinanced 1 to 3 times in that time frame each and every single time. That means for each of those individual people, I potentially could help an upwards of 12 times, if that, over the lifetime of that experience, which is, fully transparent. I get paid every time I help someone. Obviously, we don't. This is not a
As you should
nonprofit.
be. You earned it.
Exactly. We've earned it. We do it the right way. We do it as affordably as possible for that client of ours. And that relationship to you should be so valuable, monetarily valuable. You know what I mean? Like the person that helped you, they could have helped you on your refinance. They could have helped you guys when you're buying your next house. They could have, like, there's just missed opportunity.
Yeah.
For a very short-sighted vision in what we do for work, right? I do not care. I mean, I do, but I'm not trying to rush someone to an end goal so I can cash a paycheck so I can pay the bill for my Maserati. Like, I just don't do that. That might be me uniquely myself because I grew up in this industry and I've seen things time and time again manifest themselves in ways that you don't want them to. So I just choose not to live my life that way. You know what I mean? But again, it's a unique perspective that I probably have.
I do have another question for you. Most mortgages are 30 years, right? But then if people are constantly moving out of their houses, that's on average it's 7 to 10 years that someone will stay in that house, then wouldn't that speak volumes towards like the amount of equity? Like it's just really consistent in
Crazy.
homes. Like people are able to sell them and buy another one even after that time.
Yeah, we can. I can kind of explain to you like that nest egg piece of like how that, and for the most part, I want to say like, oh my God, I can't remember what the number is, but something insane, like 70 to 90% of someone's personal wealth when it comes to retirement is locked up in the real estate that they own, whether that's their primary residence or multiple residences or whatever the case may be. And a lot of times it's just their primary residence. It's just the home that they live in or have lived in. So what happens when you don't have that? You're just cooked. Like
you just pay rent as the rent continues.
Well, not only that, have you been paying rent the entire time, getting you to retirement age? But when you get to retirement age, and let's say, for example, like me, I'm an idiot when it comes to things like this. In my 20s, I was absolutely, for somebody that is in finance, and this is one of the reasons why I educate all of these things now so passionately, is because oh my God. So when I was 21, okay, or immediately right before I turned 21, I turned 21 in the July of 2007. So it was in this industry, in real estate and mortgage, we always know essentially things 6 months to a year in advance, okay? So if you remember, we had basically the great housing whatever in 2008, okay? By the summer of 2007, we already knew that there was a lot of things in the real estate and mortgage world that were not gonna be good. You know what I mean? Things were super slowing down. The industry was really, really constricting quickly. The rates, like it was just crazy. And I was 20 and I was like, I'm turning 21 this summer and I need a break. Like I need to just take a breather. And I actually got into the service industry, not in the way that you would think, because this is how I met my wife actually. It was for a retail bar and cigar lounge, actually here in Las Vegas, that is still hold a dear place in my heart. It's actually closing down at the end of this month after 20 years of being open. Yes, I think they opened in 2005 or 6.
It's just always tough to hear that like a long-standing pillar of the community is going to be closing its doors.
I know. Well, it is inside the Forum Shops.
Oh,
so it's the most expensive real estate, like literally, and I think in possibly the entire world, retail space-wise. But it's also one of the last vestiges of like smoking indoors. Which is insane. Like smoking indoors at the Forum Shops was always like its thing. You know what I mean? But anyways, so when I left the mortgage industry in 2007, started working at this cigar bar and having a phenomenally fun time as a 21-year-old kid in the cigar bar and meeting all these millionaires, and it was a great time. The company that I was at, not only was I making fantastic money, but they also offered a basically 100% match on your 401k up to 6%, like insane
That is nuts.
And I was like, why would I do that and sacrifice some of my paycheck every 2 weeks and not get to spend all of my money every single 2 weeks like a psycho? And for the entire 5 years that I was there, I never invested in my 401k there and missed out on tens of thousands of dollars at what would have been 2008, 9, 10, 11, the best possible time to be investing in the stock market because everything was, you know what I mean? Like,
yeah, it was all down. Yeah.
at this point, going through COVID now, seeing the 27,000% returns on the majority, like, I might have not had to work at this point, you know what I mean? But imagine, like, actually, right? Like, insane.
Don't sell Bitcoin.
Jeez, dude, insane. I have a whole nother Bitcoin story actually for a buddy of mine that in 2010 could not stop talking to me about Bitcoin, and one of the smartest kids and likely one of the richest kids that I know now. And I am a very, what is that called? Not adversarial. What is it called when you like pose like the other side of an argument always?
Like a devil's advocate? Is that...
Kind of, but there's like another, I'm a, what the freak is it?
Cynical?
I guess, but anyways, I'm always that person. Like I always want to be the other side of the argument with someone, which I didn't need to be with Bitcoin. Is like I didn't even know enough about it at that point. But yeah, I should have bought Bitcoin at that point too, but woulda, coulda, shoulda.
Yeah, I mean, we had to sell Bitcoin because, like, we sold, like, the little bit of Bitcoin that we had because it was the beginning of 2020. We just got our house, and my wife got laid off from her job, so we had, like, I don't know, like, $1,200 worth of Bitcoin, and, like, we sold it. But
wait, did you sell it at, like, 25K when it fell all the way down in, like, the winter?
We did in 2020, yeah. And so it's like, if we had held on to it to today, it would have been at least, I don't know, like 20, 30,000, however much money it is. But yeah, it's just one of those like weird introspective times of like time will tell, right? Like time will tell if the mortgage you got yourself into is a good mortgage, if the stock you bought is one that's going to last for a while. But yeah, time screams everything. So yeah, you were saying your 401k you didn't invest into.
Yeah, so anyways, it's mistakes like that I've made that obviously I can kind of, because I've experienced it myself and I've made those mistakes myself, and you know, I can teach to someone that otherwise wouldn't. But where I was kind of going with that is like, imagine, okay, if people's, you know, 70 to 90% of someone's wealth at the age of retirement is tied into their primary residence, you don't have a primary residence, you rented that entire time, and you didn't invest in your 401k or retirement, like, where are you at the age of 65 or 66 and whatever? Like, I don't know. Like, I actually literally don't know. So that's one of the things when it comes to just like preserving, like, I feel like wealth building and wealth generation is like a really buzzwordy type of phrase in our social media world now. And yes, it's fantastic. Trust me, I love wealth and generating and all of that stuff. But I'm just talking about preserving what you're actually just doing. You know what I mean? And that's through homeownership. Like, I promise you, it's through locking it up, being done with it. Don't think about it. Don't overcomplicate it. Don't speculate and buy the house now and sell it in 2 years. Like, try not to do those things. You know what I mean? It's just not for the faint of heart. It's not for the everyday I'm going to work person to do life stuff. You know what I mean? Like, you just buy a house. Let it do its thing.
Yeah.
Sell it if you don't want to live there anymore or whatever. But, you know, that's where our wealth preservation is going to come from. Not wealth building per se, because yes, it will generationally if you kind of just keep doing the right things generation after generation. But you're only going to be here for one generation, so you won't get to see. I mean,
such a good
I mean, it's fantastic, but no one, you know, I'm not saying anything with like my family tree or whatever, but like I didn't get passed down a ton of generational wealth myself, so I don't see that myself. You know what I mean? I can only speak to what I've experienced, I've done, I've whatever, and that's what I'm an expert in.
Yeah, but I was like, I want to know, like not everybody has like that like that inner directive of like what they need to be doing, how they need to, like each step to get to that final goal, right? And then you even said yourself, like you had different paths that you were following along through your 20s and until you got to this place. But like what was it that made you like lock into like this is the path and I'm going to give everything I've got to make sure that I'm the most successful in what I do? And
So do you want like the actual real possible answer, or do you want like the money part answer?
You can give both. Like I'll edit whatever.
Yeah, I don't know. I think I have a very weird, unique perspective on like personal success and money and all of that stuff because of I grew up in like kind of a very unique way where, you know, luckily my parents are both still married and they're, you know, all of that, which is fantastic. I'm the oldest son, I'm the oldest person, essentially, the oldest kid in a Italian and Hispanic family. Okay, so my mom's 100% Italian, my dad's 100%. He's from another country. So that type of household. And being the firstborn, especially the first male and all of the above, is like a lot. And when I was a baby and young, we just didn't have any money at all. So I grew up in an apartment. I grew up, without a ton of money. Now that changed quite quickly once my mom kind of found her path in the mortgage industry and space in, the early 90s and as I'm starting to get older. So that was completely flipped on its head as I was now going to school and things like that. So, I kind of got to feel a little bit of, well, we don't really have that much and we're kind of like just making it and doing all that, which is cool. Like is what it is. You don't know any different as a kid to like, okay, now I have all of the things, but I don't necessarily have the time anymore. Like I don't have one thing people don't realize is that with success comes sacrifice, like hugely. Now, I've experienced that as a child with like parents, like they have to now deliver on time obligations elsewhere to make the money that we're now enjoying, if that makes sense. So I kind of grew up in that dynamic a little bit. So yes, we, had things and had all of that fun stuff, but we also, lost out a lot of time and family and whatever that could have otherwise been done differently. So I like to try to balance a little bit of both, if that makes sense, if possible. So I'm not like the person going out there trying to make $10 million because I never had money in my life and I just need it. And I'm also not the person that's willing to sacrifice my relationships with my wife or my family or whatever for, a financial goal. So at the same time, though, I'm a business owner. So you have to, in order to be successful, you have to have an ability to manifest financial gain and opportunity and things like that. So there's kind of like an even balance for me with that stuff. It's not like just one way or the other, if that makes sense.
Yeah.
People think like too often that you can balance both equally, but there's seasons for both, you know what I mean? Where I feel like I recognize really, really well because I've experienced both things in my life, if that makes sense.
Yeah.
But yeah, there's that. I think too many people, they want to have the thing and not put the other thing at risk for it. You know what I mean? Like with the time and the obsession factor and are you actually good at the thing you're doing or are you just there doing it?
Right.
You know what I mean? So
like, is it a means to an end or is it
right.
yeah, I get that.
Because I tell this story all the time in one of the call centers that I was managing prior to coming back to the mortgage space. I don't know if you know the dynamics of a call center, but generally speaking, they are, you as an employee are measured to certain KPIs, like let's say, for example, talk time.
Oh, yeah.
Talk time or outbound calls or whatever. And in those environments, obviously you have to maintain those KPIs or those metrics to be able to stay there, obviously. Mm-hmm. And I can't tell you, man, it just blew my mind every time we would find someone that would be on their dials for the entire quarter and then not hitting their numbers and man, this doesn't make sense and let's drill down a little bit further. And then, this entire time this person was calling a 1-800 number for Bank of America's customer service line and just hanging up and
oh my
God. Why are you in that seat? Like, you know what I mean? Like that stuff to me is strange. You know what I mean? If you're going to do something, why would you not want to do it well? Mm-hmm. You know what I mean? Especially in our specific industry when what we do directly reflects the success of someone else on the other side. You know what I mean? Like to get your house, to get your refinance, to accomplish your financial goal, to our real estate partners that are kind of that middle man and person in the experience, right? Their family livelihood, their paycheck, their whatever is, directly correlated to how we're doing and what we're doing. You know what I mean? So like you have to be good and not just be doing, if that makes sense. So does that answer your question?
Yes, it does. And I guess it leads me to another one of just like, if you're someone that's pursuing, like that's constantly pursuing better, how do you gauge that you're doing well right now? If there's always better to be done, right? It's like, how do you actually gauge I'm good? You know?
What if you're not good though? What if you're starting out at not good?
I don't know.
Yeah, that's a great question.
But it's hard measurement, and especially if you don't have anyone else that's giving you feedback, or if it's something that's not like numerically based, right? Where it was, for example, for you to transition into being your own broker, it's like that must have been a big jump from being like I'm good at this to now I think that being better means me becoming this.
Yeah, I think I would. This is kind of a weird answer, I feel like, but instead of focusing on being good, I think the only focus should be on being better, if that makes sense. So you could, in theory, start as not good at all, but as long as you're getting better every day and making incremental, like I'm talking about super small improvements on a daily, consistent basis, then over time, which is again the big common denominator with most successful people is time horizon and like how long can you stick it through. I feel like that's the part that I feel like makes most people successful versus I don't know how many people start out good. Does that make sense?
Yeah.
I don't even know, and I'm being very candid in the fact that when I first came back to the mortgage industry and I already had all of this sales experience and I already had been not just my own success, but managing success and managing people and the whole 9 yards. I'm not sure that I was good yet when I came back with that. You know what I mean? I could have thought that I was good. There were things that I was good at, but I don't know if I would say I was good when I first came back to the mortgage space because I didn't know enough. You know what I mean? Like you don't know what you don't know. You know what I mean? And in order to be good, great, and then an expert at something, it means you understand it more comprehensively than others, right? So in order for me to like build a plan, a strategy, whatever for somebody, it means because I understand it from that perspective and level, right? To be able to then teach you it. Versus I could just say, yeah, I'm good at sales, I can control these conversations, I can move the ball in the direction I want, I'm putting up all these numbers, and that's it. I get to cash my check and go home. Maybe that could be it too. Like maybe I was good at that as well from the beginning. Like I was doing deals with clients and helping people immediately. But I don't necessarily think that defines good at what you do, if that makes sense.
Yeah.
But yeah, I would say make incremental improvements on a daily basis by some sort of metric that you can track, whether that means I'm making X amount of outbound calls, making X amount of relationships, making X amount of social posts, or all of the things that move the needle for somebody in their respective industry on a daily basis that you can track and measure. Because if you, like myself, are a numbers and data nerd, you know that things only matter if you can track them, if you can pencil them, if you can, you know what I mean? Like that's the stuff that, because I don't like to guess. I'm not a big like guesser. I don't want to make any guesses when it comes to things, especially in business. I want to be able to do them, trackable activities, results, etc. That way you can improve on them or grow them. You know what I mean? So
yeah.
I would just say don't worry about being good immediately. Worry about getting better immediately. So
I love that answer.
Thanks.
And then the other question, speaking about, you don't want to be a guesser, right? But it was like, can I get a prediction for where you think that the housing market in Las Vegas, where that could be going, or in terms of just pricing?
Yeah.
And then also even what would rates look like in maybe 2 years, 5 years, if you were to guess?
Yeah.
Or not guess, but estimate.
Yeah, actually, that one of the things I wouldn't want to do is guess too much without any sort of like data to back it up, or data for sure, historical evidence is also useful for sure. But I would say data kind of, we in the mortgage industry, I don't know as much in the real estate industry, but more mortgage specifically, we're very like forward looking. Like I was saying earlier, we already know to a certain degree of what the next 6 and 12 months is going to look like. It takes a little while to get there because you essentially, in finance, you have to knock the dominoes down one by one, and they have to kind of meet, without something else blocking that next domino from getting over, you know what I mean? Because there's things like COVID, there's things like tariffs, there's things like an election, there, whatever, that thing could stop that flow of those dominoes getting knocked over. You know what I mean? But in the next 6 or 12 months, specifically with interest rates, we should see them continue to cool down over a long period of time to something like, I would say, probably a 1% decrease in what we see across all of the different agency loans. So you're talking about Fannie Mae, Freddie Mac, your conventional loans, FHA, VA, USDA, right? Those are easier to speak to or predict because, again, they're controlled by a larger, a lot of times people think that the Federal Reserve controls mortgage interest rates. Like when Jerome Powell gets on the news and says that we're going to decrease the short-term Fed funds rate by 25 basis points, that does not mean that mortgage interest rates are decreasing by 0.25%. It has no direct correlation to the two. What we follow is something called a 10-year Treasury yield. Okay, so as the forward-looking positive outlook on the U.S. economy and things like that improves, right, and the U.S. Treasury, like the yield for the U.S. Treasury decreases, mortgage rates will follow that. If the Treasury yield, that bond yield, increases, it means something bad is happening and people are putting their money in bonds versus the stock market, and that's when mortgage rates increase. They follow that yield. So it's with things like that, right? We've seen over this last few months the Treasury yields start coming down now. I think it's currently right now in October of 2025 in the very, very low 4s and starting to tickle that high 3% range, which is really good for rates. Generally speaking, rates are 2 percentage points above where that yield shows. So if you have a 4% yield, rates are generally at 6% on a conventional loan type of scenario, whatever. So there's that. On rates, I would say they continue to cool down a little bit. They continue to trend downward unless we see a catastrophic type of weird event in the financial world. As far as real estate goes, what I tell all of my clients with real estate is, so first of all, obviously, we never know exactly what's going to happen with real estate, okay? When it comes to prices and home prices going up, home prices going down, rents going up, rents going down, housing crisis or housing crash, LOL, that's not happening unless there's some crazy, like, weird, you know, whatever. But if I were a betting man, right? Do you know what the term betting with the house means?
Betting with the house?
Betting with the house?
I can guess what it means, but
like
no, not
metaphorically, exactly. Not like the house itself, but betting with the house, like the casino. You bet with the house versus against the house.
Yes.
So when all of the money is moving in a direction, okay, and you're in the finance world or around the finance world, you understand that money is very smart, okay? Usually, when a lot of money is going in a direction, that's because there's a lot of evidence of that thing being the winner. Money doesn't move to losers, generally speaking, or areas that it can't expect returns from, or pitfalls where the money is just going to burn up. I tell my clients, right, when I am trying to make a decision on, is this the right thing for me? I kind of like speculating in the stock market as well. It's like, do you want to speculate on the most sketchy penny stock, or do you want to put your retirement fund in the most secure blue chip, you know, S&P 500 FANG stock that is almost certainly going to guarantee returns for you because of the stability it provides, okay? I see the Las Vegas, and I'm talking specifically in Southern Nevada, Las Vegas, Henderson, surrounding areas, real estate market, pretty insulated from disaster, okay? I say that because of all of the billions of dollars we have coming here from literally every industry in the entire world, maybe? Definitely country, but possibly world. Whether that be our new sports teams that, as someone born and raised here in Las Vegas, I never thought in a million years I would be able to see because of things like casinos and sports betting and whatever, and that is no longer a thing. Because you can now sports bet in, I think, every single state or most of the states in the country. We now have professional sports teams, and we have basketball, we have, we have WNBA, we have hockey, we have football, and we shortly, I believe, are going to have Major League Baseball, NBA, the list goes on and on and on. So we have the sport industry, we have the entertainment industry, we obviously have the casino industry, we have our real estate market just in general, we have data centers that, you know, if you are not super familiar with how the land in and around Las Vegas works, we have some of the least populated land reserves, I feel like, in the entire country. Granted, a lot of those land reserves are owned by the government, but as the need for data centers and things like that continue to grow and we have all of this land available, a lot of that money will continue to pour here. But I just feel like in general, like our city is well preserved against, just we're heading in the right direction. All of the money around the world is coming here to Las Vegas, which is pretty amazing to see. So.
I agree with that. I think a lot of the industries here are diversifying. It's not so much like it seems like on the surface everything is geared towards entertainment, right? But like
that's what they want you to think.
Right, but it was like, for example, like Hollywood was supposed to open up a second branch here, and then something fell through with like I don't know, permits or like a bid or something.
Always,
Yeah, but like the investment of data centers, it was like there's a lot of talk that like Las Vegas is supposed to be, either the next Silicon Valley or like Austin. But I feel like a lot of the people that moved away from California ended up going to Austin instead of Las Vegas. But yeah, the capacity is here. And then when people are saying, well, data centers need a cool environment, it can't be very hot inside. It's like, well, plenty of building that we can do here. It's
100%. And we actually have, as far as like, I don't know how like tech nerdy that we should get here, but if you're familiar with like kind of the processing of computer systems and things like that, right? So like water cooling is super advantageous for things like that. And here in Las Vegas, we have like one of, I feel like, the most sophisticated water reclamation and like recycling centers in the entire world. So like where people talk about, and I get this question all the time from my in-laws that are in Ohio, and they're like, you guys live in the desert and you have no water. I'm like, yes, I got that part. We know. We're gonna be fine because we are so absolutely fantastic at recycling water. So like things like that, like when we have data centers and maybe possibly we need like water cooling systems to like whatever, this would be one of those places to do that. So
I had a chemistry teacher in high school, so that was like 12 years ago now that I faced her, but she was saying that Las Vegas would not exist within 10 years because Lake Mead would have dried up. And what's funny though is like to your point, right? We have this reclamation process which is, pretty elite and standard, but we also discovered an aquifer, like the biggest underground lake in the entire world, possibly in Nevada. And so
I didn't even know that.
Yeah, they haven't
Where's
even
that
tapped
at?
it. I have no idea, but they found an aquifer,
Dang,
and it's
cool.
it's huge. They're still trying to figure out how to tap into it safely and use it, or
Yeah.
what they want to use it for, or if it's even going to belong to Nevada or the other surrounding states. But the surface reasons why people think Vegas is even still around, or how it's able to sustain itself, it was like there's a lot of resources and more people are contributing resources to the city also.
And that's the other thing too, where we're talking about like the city itself being hundreds of billions of dollars in investment money. It's like people don't invest in things that are not going to produce returns. Like they're just not willy-nilly throwing money at this town with the expectation that in 5 or 10 years we're not going to have water here. Like they'll figure it out, I promise you. Like people preserve their wealth more than anything, and when it comes to that, it's like that's one of the, again, bet with the house. You know what I mean? Follow the money. Just do that. You'll be fine. You'll be safe. Also, too, like not to get off topic, but also to get nerdy, is being here with 2 Air Force bases here in town. Right? We also have not just the Air Force bases, but Area 51. We have a lot of all of that fun stuff, and I'm a big believer in things like cloud seeding. So like if we absolutely needed to rain here, I would believe that we could make it rain here and get, replenish our water reserves and things like that. I don't know. I don't want to speak to the, you know what I mean? But I think things like that are also a possibility. So
yeah,
just a fun time here.
Yeah.
Good old cloud seeding.
Yeah. What was the question we started off with though before?
It was the prediction of the housing market.
Oh, yes.
Yeah. So housing market, real estate, interest rates. So yeah, I mean, I would say that both are trending in the right direction. Okay. Right now I feel like we're trending where, nationally rents are actually deflating quite a bit, or is it disinflating? One of the two. Which is a really good thing for people in general, okay? Because and a lot of people in the real estate space, they don't want to hear that or say that because everyone wants everyone to buy a house, which is fantastic. Trust me, I do too. I definitely want to prepare you to be able to, go through that journey successfully. But when people can affordably live is also very important, you know what I mean? So rent's coming down, super important. With that, it should pull home prices down a little bit or adjust expectations properly or things like that to, right now we're going through an affordability crisis in general when it comes to the housing and real estate market. So that's just like the facts, you know what I mean? It's just become very expensive with, post-COVID home prices increasing like, I don't know, 30%. So.
But
yeah.
is that partially because we haven't been building enough?
Yeah, it's definitely because of national decline or shortage in building affordable housing. Like I feel like the things that we build across the nation more than anything are super expensive homes, which is not great because
That's good
obviously,
feedback.
yeah. I feel like your average single family first time homebuyer house, right, which is essentially the house that my parents still live in, that I grew up in, is not what they generally build on your average track new build home. It's generally something that's kind of like outside of that affordability range for your first time homebuyer. Here in Las Vegas, I would say like the average new build property is probably somewhere between 450 to 600,000 would be my guess. Which for most first time homebuyers just is what it is right now, but it's not where they should be affordably, you know what I mean? They should still be in that like 300-ish thousand range where we don't have the supply for that. Does that make sense?
Yeah, that makes sense because I mean, if everybody that is getting approved, not everybody, but majority of people that are getting approved for a first-time home buyer, if they're getting approved for just around that $300,000 range, and you're going to rely on somebody else to sell their home for you to be able to actually buy a home at that pricing, versus if everything that's being newly built is at that $100,000 over what anybody that's a first-time home buyer could afford. That's a really good point because like when I hear people talk about affordable housing, it's not usually pointed at the developers. We're not usually looking at who's building like the homes to make it affordable. It's just every other economic condition that's feeding into what makes something affordable.
Yeah, I mean, we can't force somebody to sell their house for less than what it's worth, right? And again, I guess, not just real estate, but just in general finance, right? Something's only worth what someone else is willing to pay for it to a degree. But at the same time, it doesn't work quite like that in mortgage and real estate because you also have the other side of that coin, which is the lender or the bank or whomever's lending the money to you that says, no, that house does actually have to be worth what you're saying that you're paying for it. You can't just make a number up. You know what I mean? That's what an appraisal is, and that's what true value comes from, appraised value, comparable sales, etc. So, when people have, a couple different key metrics right now that make it very difficult for people that are already homeowners to leave that house and sell it to that generation that's coming up and to buy something new is kind of like that golden handcuffs philosophy, or not that golden handcuffs theory of you're in a house that you might not want to be in, but you have a 2% interest rate and you're not financially incentivized to sell it and move up or move down or move at all because of that 2% interest rate or whatever the case may be, right? So there has to be a motivating factor outside of just the finance piece of it. Does that make sense?
Yeah.
Like my family size grew. I can't be here anymore. I'm moving jobs or whatever across the country. So there's a lot of other moving parts that need to be like focused on or talked about versus why would somebody sell their house that they can otherwise live in pretty comfortably that has a 2% mortgage and they have a ton of equity in it? Like, what is the motivating factor? I don't know if I know of one unless there's another something else, you know what I mean?
Yeah.
Another pain point, so.
I see that, and I think that some people may be expecting that the next pain point is going to be like a bunch of layoffs and joblessness, and maybe that will be the case, but I don't think it's going to be as extreme to trigger something like the 2008 housing crisis that we were seeing.
No, because nowadays in our real estate mortgage world, we have the largest historically high levels of equity gained in the properties of home ownership. That, in 2008, that's essentially what the housing crisis was predicated on, was you not having any equity and it being too easy for you to say, you know what, I'm out of here, bye. Like, I don't have any equity in this house. I don't care if you foreclose on me or I go bankrupt or whatever. Like, I'm not losing anything other than obviously like the house itself or your next 7 years of financial future, like whatever. But, when somebody has, 40 or 50% of equity in their house, right? They're not in a position to where they have to really worry about, if they get laid off or whatever the case may be, hopefully, obviously they have a little bit of savings, but if they don't, they have all of that pent up wealth and whatever built up in their house anyways. Like
Yeah.
they're good, you know what I mean? They're fine. So I think it's something like 40% of homes right now in this country don't even have a mortgage on it. Like
Paid off homes.
completely paid off homes,
Whoa.
like actually.
Wow.
And then like the rest, the other 57% or 58 or whatever, have, you know, over 20% equity in the house, period. So it's like an absolutely humongous amount of equity that we have. It's trillions of dollars in equity in our country in real estate. It's like a small sliver of probably 1% or 2% that don't have the amount of equity or whatever, or depending on the markets that they're in across the country. So, because you still have markets where you're seeing a huge adjustment to values of homes, where we had like through like the COVID time up till present day, big droves of people moving from one place to another. Like for example, from the California to Austin people. Austin like super built up super quickly. Everyone's moving there. Home prices shoot up. And now people are starting to leave there. They're not super happy with Austin, whatever. So home prices is the market declining, or is the price adjustment just happening based on where it should have been to begin with? Does that make sense?
Yes.
Same thing
Yes.
like Florida with like natural disasters and insurance issues and things like that. Prices adjust, right? It's not a housing crash. It's just an adjustment to the like specific areas that's in, like the demand.
Yeah.
So, but yeah, it's just totally different. Like that's another thing that I educate to with my clients, in understanding what are the economic factors that we're, like the socio-economic factors that we're in right now as it relates to housing and real estate and things like that. Because it's scary. You know, we all grew up with we all knew what the 2008 housing crash was. It was all over the news and our parents experienced it, and it ruined lives and houses, you know, all of the above. But it was a climate that I don't think can ever be duplicated again.
I agree.
Knock on wood.
Yeah, please please don't happen again.
Because if it was going to happen again, it would have happened during COVID, I promise you. Like, COVID was insane when it comes to the real estate and mortgage world. But, and you guys were homeowners, and you don't have to expose yourself here, but as a homeowner during COVID, you were extended something by your mortgage lender called a mortgage forbearance. Mm-hmm. Does that sound familiar?
Yes, we didn't have to, because fortunately my company my previous employer was considered essential work because we distributed alcohol. I didn't know that alcohol was essential, but I guess it is.
Hell yeah.
So I was able to work remote, which was great. But to your point, it was like I knew a lot of people that had to plan around this forbearance thing, and they weren't entirely sure what it meant when they were signing up for it. They just knew, like, I'm okay today.
Sure, 100%. Yeah, and that's something that's like a testament to the industry as a whole, understanding and learning from past mistakes. So mortgage forbearance essentially is, a person's ability to say, hey, I have an economic hardship presently. Okay, so we all had economic hardship during COVID for the most part. There's a present economic hardship that, is making it unable for me to make my mortgage payment, and that particular lender, bank, institution, or whatever will extend some sort of mortgage forbearance, meaning they're going to allow you to defer the payments for a specified amount of time. Let's say 3 months, 6 months, 12 months. I mean, I've seen, I think, longer than 12 months, 24 months. I don't know specifically, but usually it's somewhere between that 3 to 12 month time frame.
Yeah.
I'm going to defer those payments because of an economic hardship, and now those payments essentially will be added to a basically a non-interest bearing principal balance on the back of my loan to be paid at a later date at the end of the loan, or through things like a refinance or sale.
Okay.
Does that make sense?
Yes.
Without that, you would have had an entire nation of people that couldn't pay their mortgage, and they would have all gone into default, and we all would have basically either foreclosed or short sold our properties. And because of people doing that, you would have had things like another housing crisis happen, where it's a race to the bottom. Like, I don't know if you've ever experienced a race to the bottom outside of like 2008 or whatever, but like things like a stock sale, you know what I mean? Like, where one person's selling a huge position of stocks, now everyone else starts selling, now that price of the stock is getting super low, and now my stock is worthless. That's essentially what a housing crash is, right? So like in 2008, that's what happened. This person lists their house. Because this person lists their house, there's 2 other people that listed their house for a little bit lower, so it sells faster. Then 8 other people list their house because these 2 are selling at this price, and they really need to sell, and they don't. so on and so forth.
It's like a flood of supply and like not enough demand for it because again, who's going to get qualified at that point? But
exactly. Yeah, there was a time in 2008 too when you would just think, if you weren't familiar with the time, that you would be like, "Oh, I wish I was around in 2008 so I could buy up all the houses." But not only did people at that time not have jobs or an ability to buy a house or whatever, but mortgage loans were extremely difficult to qualify for at that time because banks were not incredibly eager to lend at a time when most people are going the other direction. You know what I mean? When they're trying to kind of stop the bleeding, if you will, right? They're not just willy-nilly, for a first-time home buyer, 3% down, conventional loan, like, come on in. It was very difficult to get a home loan at that time. You know what I mean? Like, and I'm talking about from someone that grew up in the industry, was around and working in the industry prior to that, but that would have been my peak. I first tried to buy a house in 2006 with a friend of mine, very close friend of mine, that even in 2006, this is even 2 years before the economic collapse, housing crash. There was already issues with the mortgage lending world where the lender that we were using to purchase our house, and we got to the closing table, went out of business. Like at the time that we signed our closing papers, that later that afternoon or whatever, that lender like shut its doors down. And I decided to, as a 19-year-old, say, you know what? I'm just going to wait to buy a house a little bit longer and figure something out, which then led me to being a perpetual renter for over a decade, but that's fine. And I backed out of the scenario. The friend of mine that I was buying a house with did not back out, ended up buying a house anyways, went through the whole 2008 thing, blah, blah, blah. It was just the whole thing. So, yeah, it's just lifing, you know what I mean? So you just need to make sure that you understand the complexities kind of what you're doing. And I feel like somebody like yourself that is in and around finance, you understand that finance is the most complicated industry to be in because it's like a living, breathing organism. It's not like selling a product, although it is a product, right? Obviously, we sell products, mortgage loans, but it's a living, breathing thing. You know what I mean? Like it changes on a daily. It, has it knows where it wants to go type thing. You know what I mean? And you need to be able to educate to that and prepare someone for that journey. You know what I mean? Because homeownership truly is a journey. It's like that first starting point to like, oh, now I'm becoming financially successful and kind of taking those steps forward to what eventually will be that later stage of life, your retirement, things like that. We were talking earlier about like the amount of someone's personal financial wealth being locked into their house at the age of retirement. And then in addition to that, we're not even talking about like the average net worth of a homeowner versus a renter. Like the average net worth of a renter, I think, is something to the magnitude of like $6,000, which is insane. Like the personal wealth of someone in like that, I don't know, even like 35-ish, whatever, $6,000 for a renter as far as personal net worth assets. And someone of a homeowner of that equal or same age is like 40 times greater.
Wow.
It's like, why? But you know why. Like,
yeah,
I mean, literally just in the...
It's like the whole Robert Kiyosaki, just having assets. It's like assets appreciate, and it's like also considering like the time factor that goes into it. But obviously, not every house. I mean, for the most part, I would think that maybe like 80% of any house you would buy, the value would go up. But then it depends on like the timing, the area that you bought in.
Location for sure,
Yeah, like Flint, Michigan. Like you would never expect those things to happen. And I actually knew a real estate investor, I think it was last year, he was telling me he's starting to buy up properties in Flint, Michigan. He's like, I think it's going to blow up. I think it's going to be huge once they said the water's clean. And I'm like, I don't know, dude. But yes, it's a lot of like those little variables, and you can't always get it right, but you know, you dodging the bullet on getting that house at that point in time.
It was pretty crazy. Yeah, it was a pretty scary situation for sure. Scary because I had not gone through it before, myself, experienced it, whatever. It is what it is, you learn. But yeah, you know what I mean? I took a path, my buddy at the other time. However, this is how young I was at the time with this house though. I remember looking at my houses and going to different houses and viewing them and feeling them out. And I always tell all of my clients too, if you're going to try to build a real estate portfolio, one of the great ways to do that is if you have a young child or college student or someone in their late teens, early 20s that inherently is going to have roommates. Like they're just going to have roommates. Helping them become a homeowner for the very first time, that person, so like that kid or that late teens, whatever, can purchase a home as the primary owner of that property on the primary residence, right? They're going to live in that house. They do not even have to qualify income or employment wise. Their parents can qualify alongside them as what's called non-occupant co-borrowers. So they can be the financial qualifiers for the loan. And that kid now owns his own home, has roommates that live with him, okay? And essentially those parents are co-owners of that property with them, and they're building a real estate portfolio. So if you have 1 kid, 2 kid, 3 kids, you do that a few times over, they have those roommates that are living with them through the college years or early 20s or whatever, and that are just paying the mortgage anyways. That's a really, really classic, easy, structured way of building a real estate portfolio, which I just explained it to you in a minute and a half of how simple that process can be, where most people wouldn't be able to understand, flesh out, or haven't done that before, right? We've done it many, many, many times over, and it's a phenomenal way to build a real estate portfolio. But anyways, so yeah, I was so young purchasing my first house. The only thing I thought about every time I walked into one of these new houses that we were looking at was how many beer pong tables can we fit inside of the house? Right, so like I'm talking about how many in each bedroom and the dining room and the garage, and that there tells you I was a little bit too immature for home ownership, I feel like, at that time.
I'm just gawking at that store. Like, first of all, you can do that, and at the college store, because when I was in college, I had a friend named Yip, and his parents...
My dentist is named Dr. Yip, by the way. Shout out Dr. Yip.
Woo, all the Yips. So his parents were out in the Bay, like in San Francisco. I don't know what his parents did for work, but essentially my friend Yip got in trouble in the dorms for doing things he shouldn't have, got kicked out of the dorms, and so his parents' solution was to buy him a house.
Smart, yeah.
Right, and I was just like, okay, that's one way to punish your kid, but then like kind of like realizing that there was actually a lot of benefit to doing that, and it was a smart move on their parents' part, because when you're just a bunch of college kids, like, dude, your parents bought you a house? Like, it's the craziest concept, but yeah, like as an investment portfolio and like for his benefit and like the whole family's benefit, makes a ton of sense.
Yeah, and it's a really, and the reason it makes sense is because, or the reason it makes the most sense is because the kid's living in there as a primary residence. So that makes the ability to purchase the home, okay, so like for the kid or the parent or whatever, with a lesser down payment obligation, lesser interest rate, because it's a primary residence for that person. If it was a investment property solely for the parents, let's say, and the kid wasn't gonna live there and it was just for investment opportunity, then the down payment obligation would be like versus 5% down versus 20% down or more. It's hugely different. The interest rate, right, when you're talking about on a conventional loan presently for a primary residence, low 6% range. On an investment property, you're talking about 7% range, right? So the economics of a primary residence versus investment property, they're drastically different. So, and you're not doing anything out, like this is how it is. The kid's going to live there as his primary residence. He's going to college, whatever. It's just timing. It's the timing of it, right? You can't just say like, there's ways, never mind.
You're just planning into the future for
100%.
like instead of paying for dorm costs, which is probably like $20,000, just put that towards the down payment on a house.
Yep. It's kind of the, when you're replacing rent with ownership and you're paying your mortgage, you're doing the same thing with the kid, but he also has the opportunity to, in addition to not paying dorm rent or whatever, but he has his other friends that would otherwise also be in the dorm living with him, you know what I mean? And, you and I both know that in the college years, it's always fun to live with 3, 4, 5 people or multiple people to a room or whatever. You almost want to do that as a college person or someone that's like, you know what I mean? Like, I don't know why, but that's just a vibe. Everyone wants to be together. Where now if the sun goes down and we're not at dinner, I'm probably not around other people, you know what I mean? Like, so.
it's so funny, like early 20s to like 30, just at 30, like it's a whole different world.
Yes, it's over with for sure.
I guess that if you were to try to give just like super abbreviated advice to somebody that was looking to buy their first home, like what would that advice look like? Like that's timeless, that would never change.
Timeless advice for someone looking to buy a house for the first time?
Yes.
Okay. I would first, so to me, I don't want to take like the easy way out here essentially, but one of the things that I always have to tell or teach to in my industry is being able to ask really, really good questions. So one of my things that I need to do with all of my clients, especially first-time home buyers or people that are experiencing it for the first time, is I need to understand what their story is. So I need to understand, like, where are we starting from? Have they owned a home before? Has their family owned a home before? Do they understand home ownership? Do they whatever, right? That way I can help explain to them, again, once we get to that part, all of the benefits and nuance of home ownership as it relates to like what their future looks like. But just becoming a homeowner is super simple because it's always broken down essentially into 4 parts: income, employment, assets, and credit. Okay, that's like super easy: income, employment, assets, credit. And with that, those are the 4 things that someone needs to prepare for when it comes to, like, you know, how do you qualify for a home loan? That's what we're looking for as a mortgage broker, mortgage lender, whatever. Those are the 4 requirements in your ability to repay a mortgage: income, employment, assets, and credit. Okay, so the income and employment piece, right? You don't have to be at any particular job for 2 years, but we are going to build a 2-year work history for you. If you are just coming out of college, okay, for example, and you're going into the career field of study, and you just started there yesterday, we can still build a 2-year work history for you from your college transcripts. So don't let something just like a defined term of 2 years stop you from homeownership, but you should understand what it means. Okay, so that's something that I educate and teach to. A really hot topic right now in the mortgage finance real estate world is variable hours and variable income, where somebody that, let's say, for example, you know, most of the people in the C-suite or corporate world earn salary. So you get a defined dollar amount of income, whether that's annually, monthly, or hourly, meaning you're guaranteed 40 hours per work week or whatever times hourly or salary, whatever. That's not variable hours. It's a defined amount of money that you can use immediately. If you work any type of variable hours or income, you have to be able to verify that you've earned said variable hours, not presently with that employer, but in total for the last 2 years. Does that make sense?
Yes.
So that's like a little nuanced piece of the first understanding of, okay, yes, you make $20 an hour times whatever, but do you always work 40 hours a week, or do you sometimes work 36?
Is there
sometimes work 43?
Is there like a specific like job that would like fall an example of that, like being a nurse? Like,
nurse is probably one of the most difficult to understand because of all of the different shift differentials that they earn or make or whatever, you know what I mean, depending on what type of nurse that they are. So somebody that is a nurse, depending on how those shifts look for them, should, first of all, you should always make sure you're doing everything possible to reach out to an expert as early in the process as possible, not when you've already found the house of your dreams. Like, you don't want to set yourself up for failure or disappointment by doing that because of some of the complexities in what we do for work and living and mortgage, and it's frustrating. And I'm sure every single person here has heard their friends or family talk about, oh man, I tried to apply for a mortgage and it was so hard and difficult, and it's not, you know what I mean? You just have to set proper expectations and know what's going to happen, you know what I mean? Because most of those people did just what I said. They went out, they looked for a house, they're not ready yet, qualifying wise, et cetera, and then they lost that house. It is what it is. That's, you know, kind of setting themselves up for failure. But yeah, things like nurses, a little bit more difficult because the shift differential, you need to make sure that you can document a specific time history for it. We're in one of the most difficult areas in the entire country because of tips. So we have, you know, a large portion of our community here works in the service industry. They receive either tip compliance, they receive stated tips on paychecks. The vast majority of them, you know, receive cash tips and they don't claim cash tips. Like, it's a whole thing. So that's another section of income and employment that needs verification over 2 years because it's variable income. So again, working with an expert that understands these nuanced qualifying pieces and how to qualify for them and how to solve for why is very, very important. You know what I mean? Because if you're just an application, you submit your nurse with 9 months of experience and you have great income on paper, but you don't have the, history of or previous history with another employer for that full 2, whatever, you're not going to have a good time, or you're just going to get denied, or they might give you a pre-qualification, but when you find the house and go through the loan process, you're going to get denied. Like, whatever, you know what I mean? You want to be able to avoid those obstacles as early in the process as possible, and then be able to solve for the solution. That's income and employment. Just talking about that right there is very complicated. I'm sure that it can be super easy. It is super easy, or it can be extremely complicated. It's like one of the two. How do you want to treat it?
But it does open up doors either way, though. It
100%.
doesn't have to be 100% cut and dry.
No, yeah, exactly. There's ways to, you know what I mean? Like, even qualifying as a whole, one of the other things that we were just talking about with the kid that's going to college, one of those solutions for a lot of those problems is bringing in a parent or relative as what's called a non-occupant co-borrower, regardless of, the whatever the scenario is, right? But if let's say, for example, we had a nurse, she just started her job, she's only been there 6 months, she can't qualify on her own yet. Okay, no problem, right? We obviously provide, this is the solution for you. This is another solution if you have a family member, a relative, whatever that can help you, right? That would be your non-occupant co-borrower, or whatever else the case may be. Those non-occupant co-borrowers can make those or pull into fruition like the home ownership piece quicker, right? If you have the ability to do that, right? So we always pose multiple solutions to problems for people. So a non-occupant co-borrower essentially can help somebody qualify, as long as they're a family member, relative, whatever, with their income, their history, without needing the income or employment from that present primary borrower. Does that make sense?
Mm-hmm. Mm-hmm.
The part that you can't get around, though, is credit. So you always have to have, first of all, credit, essentially, right? There's very, very few times or programs where you're qualifying with no credit score. It's not impossible, but it's never recommended, because you're obviously going to get a significantly different financing opportunity when you have no credit score versus having a decent credit score, right? But in the mortgage world, we always qualify. Let's say, for example, you had like multiple borrowers on a loan, multiple people on the same loan application. Mm-hmm. You always qualify to the lowest mid score for any of the borrowers. If you have 2 people, you have 2 mid scores. So you have Experian, Equifax, and TransUnion. Of those 3 scores, there's going to be a score that's in the middle, the one that's not the higher one, not the lowest one, but the middle score. And if you have 2 people, you have 2 mid scores. So we always qualify off the lower of the 2 mid scores, and that's for risk mitigation.
That makes sense.
Okay. If you have 3 people or 4 people, which you can have 4 borrowers on a loan, it's always the lowest of the totality of it, right? Okay. But you don't want to have, if possible, a huge discrepancy in all of the borrowers, right? Because if you have 2 people that are 800s and one that's a 620, we're going to qualify off the 620 FICO. You know what I mean? So it's best to try to kind of get everyone on the same page together if possible, bring the scores up, whatever. But the credit piece is usually the harder problem to solve for most people than the income piece is, right? Because sometimes, with credit, as you know, you can have, people that have never worked on their credit before, or they haven't paid enough attention on the credit, they didn't take credit seriously enough, and it takes a little bit of time usually to bring credit up, unless you're using specific tools and, like things like authorized users to pull scores up super quickly. So, and I've done it myself. I've done it. It takes 6 months, 12 months to really put the work in, put your money where your mouth is, and let those scores kind of rebuild themselves. But it will happen. You know what I mean? You just have to really make the sacrifice. So, and then lastly is, which you think that this would be the most important, which it really should be. I don't love, having conversations with people that have no savings and no money and they want to buy a house. To me, that's a very, very dangerous proposition, because with homeownership, whether we're getting you a down payment assistance or grant or not, homeownership comes with other, things that can happen in the house that you never want to have. Because if you don't have money saved up, I'm guessing that you also possibly don't have fantastic credit or access to money or credit. And what happens if there's an emergency in the house and you don't have any of those things?
Right.
So,
I mean, I could tell from my own story too that, so within the 6 months that we got our townhouse, The water heater went out within the first 2 months.
100%.
The air conditioner, which was apparently the original air conditioner from like the 80s, that
I believe
went
it.
out.
I think actually, not to cut you off, but
Yeah.
here in Vegas, they actually build our or something specifically with our AC units here, where they're generally they last because of our like weather, and we don't have like heavy climate or whatever here. 25 to 30 years, surprisingly. Like our AC units
Nice.
actually last a while. But at that point, where yours is like from the 80s,
I know,
it's
like, this
time to
is
go.
But yeah, replacing all of that within 6 months, and it was like, and I just opened my first credit card the year before. It was like, yeah, it really was a big adjustment period, and we learned our lesson then. So having cash reserves, definitely, even after buying the house or going through closing, smart.
And
move.
you guys, when you purchased your house, you put how much down?
Oh, I don't even like as a percentage or
Like
total
3.5% down. Was it an FHA loan? I can't
Yeah, it
remember.
was an FHA,
So
so-
probably 3.5% down, like a traditional FHA loan, which is, to me, I feel like is just the barrier of entry. You know what I mean? We have, as a mortgage broker, like we were talking about earlier, many different lenders and banks and programs, and that is some of the pros and benefits of working with a mortgage broker is the variety of programs that we offer. However, just because you can get a down payment assistance or grant program, which is highly advantageous under certain circumstance, doesn't mean you should be buying a house with no money,
Yeah.
right? Because again, there should be a barrier of entry, or there should be a level of cushion and protection for yourself as well, moving forward into the house once you are a homeowner. Because trust me, I'm very, very good at what I do. I can make most people a homeowner in a certain period of time, like proven, like it's a fact. We've done it, we've been there, done that. But should I? You know what I mean? That's the ultimate question. Most of the time when you ask a realtor or someone like that's in the industry trying to cash a paycheck, they're gonna say, I need you to make this person a homeowner, you know what I mean? But is it the right thing for me to do always given certain circumstance? You know what I mean? I need to make sure that that person's going to be able to afford, live comfortably,
Yeah.
manage to their finance, so on and so forth. Now, I can't stop someone from becoming a homeowner if in fact they can qualify and do that, obviously, but we can advise, you know what I mean, properly. So yeah, for me, assets is a big thing. Like I don't like to see when clients have $0 and they're being pushed in the direction of homeownership right away. Not a great idea, but understanding the importance of having something to fall back on
Yeah.
lies on us, I feel like. So
And hopefully it's a cash reserves instead of like your credit cards. So
oof, yeah, I mean, for sure, 100%. But imagine if you don't even have credit, like you have nothing to fall back on. That's really scary, you know what I mean? And a lot of times too, even with credit cards, that's something that I teach my clients about, like understanding credit itself when you're talking about things like credit utilization, where when we're younger, right, we're all super stoked to get credit cards and use them and carry balances and pay it down slowly, and we're paying interest and it's a whole thing. As you get older or you have more resources to your name, you start realizing, man, I'm using less of my credit, hopefully, and they keep giving me more and more credit. I don't want to use it. Why do they keep giving it to me? And it's a really, really good thing. But people generally hesitate from what's called credit limit increases with their credit cards because they don't want to be tempted to use it or abuse it or whatever. When, to be honest with you, it should be opposite. You should be able to, right, like with my credit card specifically, if you're managing credit cards properly and you're paying off your balance at the, before the statement close date, you're not paying interest, all of that fun stuff, right? You can use the credit card throughout the month, or even if you had a rollover balance, and it would have less impact to your credit score and less detrimental effect to your credit profile if you have a higher credit limit, right? If you have $1,500 in credit limit and you use $1,000, that's way different than if you have a $30,000 credit limit and use that same $1,000.
right.
Like that almost doesn't matter at all. But when you're using $1,000 to $1,500, it's a real big deal. You know what I mean? So it's things like that we also kind of educate our clients on, and understanding how credit utilization works, the importance of kind of growing credit limits if possible. That way when they do use their credit, that doesn't pose such a detrimental impact to their credit. Things like that, going above and beyond, and providing an additional type of experience to someone. So
Yeah, and there's room to kind of not necessarily gamify it, but
well, kind of, yeah. I mean, honestly, I like to gamify mine. I do on my credit. So don't know if we were talking about this last week, but with most credit cards that you already have, with a soft credit check, not a hard inquiry, because you don't want hard inquiries on your credit, but with a soft credit check, they will allow you to do a credit limit increase on specific time periods. So like every 6 months or every year or whatever. Some of them will allow you to do it every month, as often as every month, which I don't recommend that. But if you're getting credit limit increases every 6 months with a soft credit check and it's little incremental bumps over a period of time, you're going to end up with a much higher credit limit to allow you to use that credit line a little bit more comfortably and with less impact to your credit than, again, just letting that same $1,000 credit limit that you have sit there forever and you never want to use it and it's worthless and it's not, you know what I mean? So, because every time you use it, it's going to wreck your credit, right? So you can kind of gamify it. I actually track it on a spreadsheet for myself because I'm a nerd. But every 6 months, when I do it, how I did it, how much did I get increased, what, blah, 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 blah. So
that's great.
Yeah, it's good times. Like, I think another, is it Robert Kiyosaki or it's another finance influencer that I follow on TikTok? But they always talk about like just tracking your finance. Like if you don't actively track your finances, like, and I'm talking about, again, I have a spreadsheet that literally will list out all of my credit accounts, all of my credit limits, all of my current active balances, if there are any. If I have any, like, let's say, for example, I have 0% financing through X amount of month or year.
I document all those too.
Like you have to track your finances, man. Like if you don't do that, how are you going to know what's happening across? So I do that. I also track like active balances in different accounts for what's where, who's what. Like if you don't know what you have, how could you manage to it, on a monthly basis? Like you wouldn't be able to. And then one last pro tip I always have for my clients is making sure at an absolute minimum that we have at least a minimum, like an auto pay set up for minimum payment every single month. I talk to people every once in a while, and not to say there's anything wrong with it per se, or that I don't trust them, but they're like, no, I want to make the payment on my own. And I'm just like, I mean, I get it. I understand why you're saying that. I used to say that myself when I knew in the little back of my head, I'm like, just in case I don't have the money, they're not going to draft it out of my account. But like you're talking about literally like the minimum payment. You want to make sure that you just put a firewall up for yourself in the event that you don't just, things happen, life's, like you can slip and forget, and that little $15 minimum monthly payment that you forgot to make for whatever reason now reports a 30-day late to your credit that will not come off of your credit for the next 7 years. And essentially, I don't want to say you're cooked, but if that happens 1, 2, or 3 times over a period of time, it sucks when it's highly avoidable. So minimum payment, automatic, like a no-brainer thing on all of the accounts for sure.
Yeah, because late payments would impact. Was it a certain number of late payments that would impact your? You're
talking about qualifying for a mortgage?
Yes.
So I would be on a credit card. I'm less worried about the late payments on a credit card than I am on the impact to the scores themselves.
Gotcha.
So late payments are one of, I would say, outside of like bankruptcies and things like that, it's probably tied with credit utilization. Okay. Late payments and credit utilization of what has the most impact, negative impact on your credit score, versus things like a collection or a charge-off, where yes, they're bad, obviously, but they've already happened and they're done with, and it is what it is. You know what I mean?
Interesting.
A late payment shows somebody that you can potentially get in the habit of not making on-time payments, right? Now, a collection or a charge-off can do essentially that same thing, but it's settled, it's done, there's some degree of finality to that. But an active account with late payment, whatever, just is not good for your credit score, for the different like pie chart of how different things affect your credit. Much like credit utilization. When you're using a lot of your utilization on the active credit limit that you have available to yourself, it shows somebody that you are needing the money and with an inability to pay that money off, right? So that's a whole other thing. But yeah, late payments for the most part, like on revolving accounts, credit cards, things like that, we don't necessarily care about the late payments per se if we can still get automated underwriting approval through things like Fannie Mae, Freddie Mac, what we call desktop underwriter and loan prospector. Those are specific mortgage terms, but if we're able to put someone's file through those systems and still get what's called an approved eligible, we don't necessarily look at specifically late payments because the underwriting system already looked at it and said they're fine. Now, if we don't get an automated approval, let's say, for example, we don't get that because someone's credit score is a little bit lower, they have poor credit performance or history as a whole, then we have to really drill down specifically into what the accounts are. Are they 30-day, 60-day, 90-day late? How many are there? What accounts are they on? Things like that. That becomes more of a manual type of underwriting experience.
Gotcha.
Does that make sense?
Yeah.
But it's more the scores themselves. So you want to try to maintain, if possible, the highest scores possible through things like gamifying this system of lower utilization, higher credit limits, on-time payments with setting up minimum monthly payments and auto pay, things like that. Like, it's not super hard. Like, it's pretty straightforward and easy. The hard part is when you've already made the mistakes and then you're like blaming the system and you hate the people that put you in collections and you don't think that you have to pay the things off because it's going to fall off your credit in 7 years, like someone told you that their mom's grandma did that same thing, and it's just like not the case. It's almost never the case, right? So you just have to kind of bite the bullet and pay this stuff off, and I mean,
get ready to buy a house. Like, that's what you gotta do.
Super simple stuff. Yeah. So it's painful. Every good thing I feel like in life is painful. You know what I mean? Success is super painful. Like, it's very painful to not hang out all the time, not party, not do whatever to become successful. To have good credit, to have financial means, to do whatever, you have to sacrifice and not, be willy-nilly spending all the time and not saving and not investing and not planning for the future and not setting up accounts on auto pay and not you just have to do some things that aren't always super fun to be able to achieve the goals. You know what I mean? So like with work, you have to show up to work and put the work in to move forward in your career, right? I think I've never been promoted or something like that when I wasn't performing or I wasn't putting the work in or showing up or whatever, you know what I mean? You just have to do the things to be able to get to the next stage. The thing where people get confused, you don't have to get to the next stage though. You can just stay where you're at. That's up to you though, so.
I mean, that's maddening. That's insane to think you'd be in the same place forever.
Could you imagine? That'd be wild.
There are people, because on the opposite end of it, right? There's people like us who are really driven and that want to be better and they want to fulfill whatever that highest version of themselves is supposed to be.
Yeah.
And then there's other people that really shy away from that feel very uncomfortable considering that they should be a different thing besides exactly what they are. Mm-hmm. And it's not like the people that are ambitious or that want self-betterment are looking at other people saying, or they're not looking down on them in any sort of way. But that difference, that disparity is kind of what triggers that emotion from both sides of just...
100%. Let me ask you a question. So do you have for yourself, very long-term future goals for yourself? Mm-hmm. How long-term? How far out?
I think that, I'm 30 right now. Within 20 years, I would like to be doing custom builds. I would love to be a developer, not a big developer, but if I could be part of the financer for architectural projects and it's a very unique home build that someone wants to happen in a specific area, or doing special community builds where it's I don't know, modular homes or the shipping container apartment complexes, different types of architecture. I would love to be part of those projects. But,
dang, okay.
But yeah, it's the capital from here to there is a very big differential. So just building that up.
That's amazing. I love that it's so, you have such a long, vision, and you're able to zoom out that much. That's pretty sweet. I like that.
But I mean, in terms of those baby steps to get there, I don't know if I'm taking the right baby steps because sometimes the size of those goals can seem a little soul crushing, right? Because
they always
am I on
do,
the right path? Yeah, but just step by step.
Yeah, and that's, to be honest with you, I feel like with me being where I'm at in my career and my age and all of that stuff, I have a little bit more of a day-by-day, short-term kind of actionable thing than I do a very long-term vision. I had a long-term vision maybe a year or two prior to starting my mortgage brokerage, which, to be honest with you, is not that long-term because I've been, like I said, I grew up in this industry my entire life. So I did not think when I was a little kid that I was going to own my own mortgage brokerage. I don't think I even thought about it one time. So for me, it's like a little bit more short term, like, okay, I'm kind of like building and building and building and growing and growing and growing and like letting life take me to a place that it's leading me without me pushing it myself, if that makes sense. So I personally, at my age and like kind of how I'm doing things, I do like bite-sized things myself. Like I have phases built out for what does my next quarter look like, my next year look like, my next whatever, based on meeting these certain thresholds. And you know, with the company, I had essentially like 2 phases mapped out, figured out for, okay, I'm not going to get to phase 2 until I complete phase 1. I'm not going to get to phase 3 until I complete phase 2. And believe it or not, it's pretty crazy to see how they actually manifest and essentially get knocked out and how quickly that is able to happen. So quickly that I don't even have phase 3 yet, and I'm already done with essentially phase 2. And I'm like, oh crap, like
that's a good problem to have.
That is a good problem to have. But you know, that might be something on my end where maybe I need to make a little bit more challenging goals or long-term goals now that I'm kind of like in it, if that makes sense. You know what I mean? Where for me, I really, really like to keep myself accountable on a daily basis. So I keep everything very like tomorrow, like today, not necessarily, because when I was much younger, I was very broad. Like I was like, man, where am I going to be in 10 years from now? Or man, like when I was a kid, I can't wait till I'm an adult. I can't, like, I just needed to slow down a little bit and just breathe and take actionable steps and have accountability. And when I was super young, I was in karate and whatever for what my mom thought was me beating everyone up, which it wasn't. I really, really, I'm a person that needs discipline and structure a lot. And, you know, when she took me out of karate and all that stuff, I did not have those things. Luckily, I was in sports and baseball and all that stuff. So that held me to a certain degree of discipline. But sometimes I feel like when you are inherently good or talented at something, you might believe that you don't need as much discipline in life as you really do. You know what I mean? Sometimes I let life get away from me a little bit because I'm good at things that I do, and I don't remember to focus on like the actionable steps, like the discipline part of things. So I myself, to hold me accountable as much as possible, I have to think a little bit more, like I have to zoom in a little bit more versus zooming out. But yeah, I feel like, you know, life is more fun. Trying to think, like, how can I say that little path? Does that make sense though when I was talking about kind of like the zooming in thing for me?
There's a book called The Power of Now, and that's really giving me like this vibe, this conversation is giving me those vibes. Where it's just like what matters the most is exactly what's happening right now, and if you start to think out too far into the future, it can make you all these types of emotions over something that doesn't even exist yet. The only thing that exists is this time and place now.
I have like a really good. Are you a gamer at all?
Yes.
Okay.
I love it. I'm trying to cut it out, but I love it.
Yeah, I know it's bad, but it is what it is. Gotta have a vice. Yeah. Honestly, I say the same thing for my niece and nephews. I don't think my niece games as much, but my nephews. You know what I mean? Especially if you don't. I feel like for a young kid. Okay, if you don't, and we're gonna get off on a tangent here, but if you don't inherently love reading or spend time reading or do schoolwork or whatever, there definitely is something behind gaming that not just like motor skill wise, but if you're playing specific types of games like RPG games and you're reading and you're problem solving and whatever, I don't know if I would be the same person, like both like strategically and like intellectually as I am if I did in game, to be honest with you, which is kind of crazy to say, but I do, you know, attest some of my like actual problem solving skills and whatever to that. But okay, so gaming for me. This is like life, actually. This is a metaphor for like a life with me. So I used to, when I was playing games as a younger person or whatever, I would always try to perfect everything that I was doing in my game to like everything, and restart and restart and restart and try again and start over and over and over and over. So I would do this forever, trying to get like the perfect save or the perfect game or the perfect whatever, right? So for me, it would take me forever to beat a game, if I ever did beat it, because I'm trying to get this perfect whatever that really doesn't matter or exist or whatever. Well, that leaked over into my actual real life a lot. And it was something that I actually had to recognize, and I was like aware of, like maybe sometime in my mid-20s or late 20s. And really when I came back into the mortgage business, and I'm like, I can't keep doing this. Like, I can't reinvent myself all of the time and start from square one again. Not necessarily start from square one, because you're taking along skills and all that stuff, but like just really locking in. You know what I mean? And when I stopped doing that, and when I really started to committing to a decision, a thing, a whatever, and just going with it, is when I really started to see more success in my, although I had been successful, arguably pretty much my, knock on wood, all adult life to a certain degree. I don't think you'll get compound success or real big true success or whatever until you fully commit to something. Does that make sense?
Yeah. Do you think that the decision, that committing to something is more about the actual decision itself, or about the emotions that fuel you to stay committed?
Yeah, I think it's the internalization of whatever it is that you're deciding to do. I don't think it's the thing per se, because it could be, hopefully it's the right thing, or maybe, you don't want to commit to doing, I'm just going to do whatever. Like, you've got to be obviously, hopefully focused on the right thing. But yeah, for me, it's like the internalization of it. You know what I mean? I could focus on, like we were talking about earlier, I could focus on something deeply that could not be super productive, and I would be super obsessive by it. You know what I mean? So
yeah.
But yeah, and then for me, again, just taking it day by day and taking it one step at a time and growing over time and all of that stuff, for me, it's much more palatable to my like inner self, psyche, and consciousness. You know what I mean? Versus, yeah, for me, like looking too far ahead in the future is just not. It's not as powerful to me.
Yeah.
So.
That makes a lot of sense.
Yeah.
Thank you for taking the time to have this conversation and do this interview with me, Mario.
Buddy. Yeah, it was super fun.
If anybody wants to reach out to you and get an idea of how they can buy a house in the Las Vegas area, how should they reach out to you?
So I highly encourage every single person to, at the very least, reach out to have, start that conversation of, understanding what homeownership is, educate themselves on the process of homeownership and how to take, again, like we were talking about, actionable steps forward, right? Mm-hmm. One of the things with me is I'm very giving with my time when it comes to just having those conversations and setting those expectations with my client. So, whether you're going on the siennamortgage.com website and you're, putting in your contact information for a quote, I'll get a hold of you there. Whether you're DMing me on social media, we of course are on Facebook, Instagram, TikTok, YouTube, X, the whole 9 yards, you can always DM me directly there. On my actual website, I am one of the crazy people that will actually give you my personal cell phone number so you can text me, obviously respectfully if possible, but you can text me and we can set up a time to either meet in my office, hop on Zoom, or any of the above. I am very, very giving and accessible, especially here being that we're a community partner. But yeah, so I'm very, very easy to get a hold of. That's one thing too. I make myself very accessible. If you have not yet seen my car, my my face and my company and my number and my contact info is all on the side of my vehicle and all over everything that I do and most of my clothing and on the local high schools here and their fields and banners. And, we want to be present in the community at all times as a community partner. So very easy to get a hold of, but yeah, I would highly suggest taking a visit on siennamortgage.com or any of our social media accounts and just reach out to me directly.
Awesome. Thank
you.